All right, greetings everyone. This is Eric, founder and CEO of Cubicle Investing. Definitely visit the website at cubicleinvesting.com because we have a lot of good things going on that you can check out on the website. So today is February the 5th, and as usual, I am in a trade. So as you can see here, I have a vertical put credit spread on where I sold the 48.90 and I bought the 48.85, 15 contracts. And as you can see, the price of SPX is no threat to my vertical put credit spread. My vertical put credit spread is far out of the money. So a pretty easy trading session, right? And the reason why I selected the strike prices that I selected on the put side is because, as I mentioned before in previous videos, I'm always looking to trade in the direction in which the SPX, which I primarily trade. So I'm looking to trade in a direction in which the SPX is moving, because it takes energy to go up or to go down. So as the SPX is using energy to go down, I know that eventually that energy will wane, it will decrease, and the SPX will find a floor. So I'm just looking to get below that floor on the put side versus going on the call side, which is probably what a lot of people would actually do, because if the price of the underlying is going down, then it makes sense that one would get on the call side and just watch the price of SPX move away from your position. But as you can see here, the SPX actually bounced at 10:45 a.m. and is heading back to the upside. And so one of the things that I always convey to my Flip That Option members is the importance of P-A.I. P-A.I is a term that I coined, and it stands for price action information. So the more price action information you have with respect to the SPX, then the more informed you are, the more effective you are at selecting your strike prices, whether it be on the call side or the put side. And so one of the criteria that I stress is that you want to wait for the SPX to make a 20 strike price or a, not a 20 strike price, but a 20-point move below or above the opening price. So the opening price today was 49.57, and so it actually made a 20-point move below the opening price at around 10:10 a.m. this morning. So essentially it dropped below 49.37 because the opening price was what? 49.57. So a 20-point drop is 49.37. So anything below 49.37, then, you know, I am actually looking, that's my first cue to look to put on a trade. Now I'm still going to be patient because, as you can see right here, the SPX was showing that it was beginning to bounce, but I knew that, well, I didn't know, but I sort of speculated that that was a fake out. And so I wanted to wait a little longer, because I know oftentimes that first green candle, you know, when the SPX is falling, could actually be a fake out, and it was a fake out. And so as you can see here, the SPX, the sellers came in again and started to continue to take control or maintain control up until roughly 10:40. And so what I was looking for was, the buyers to come in and actually get above this level here. And so as you can see, it did. It got above the body of this candle here at around 11:55 a.m. Now I got into this trade, this vertical put credit spread at around 11:07 a.m. So roughly, if I look at a 1 minute chart, so roughly on the 1 minute chart. So we're talking about this candle. So we're talking about this area right here. And so as you can see, this candle is almost parallel to the top of the wick of this this selling segment, or this selling phase here. And so that gave me the impression that the buyers were back in control and that the SPX would actually continue to the upside. And as you can see, it has. And so what I do is, every day I mark off the 20-point move up and down. So 20-point move up and down with respect to the opening price. And I'm just looking, I don't even look to put on a trade unless the SPX has dropped below that 20-point move or has moved above that 20-point move. And then from that point on, I am implementing what I call P-A.I, price action information, because the information is going to inform me, the price action information is going to inform me where I need to place my my short strike and my long strikes, on whether it be on the call side or the put side. And again, my preference is to always trade in the direction in which the underlying, in this case the SPX, is moving. And so as you can see here, I marked off where my short strike is on the put side. And so yeah, so it's a pretty easy trading day, because I'm implementing my concept of price action information. And once that SPX makes that 20-point move up or down with respect to the opening price, then yeah, so I'm just looking to continue to be patient and use that information, that PAI, that price action information, to place my trades. And so this is really how I win the majority, how I was able to have a 91% win rate last year, and this year there is not going to be any different. I am going to win the majority of my trades, 9 out of 10, because of the way that I trade. I'm looking for those large moves, and those large moves actually help me to inform me as to which side I need to be on, and to select to effectively select my strike prices for my vertical credit spreads.